Funding for Market Journal is provided by the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Luke Beckman analyzes the USDA's quarterly grain stocks report. Lee Schulz describes the bleak margins for hog producers. Shawn Conley explains the importance of testing for Soybean Cyst Nematode. And Dan Steinkruger discusses farm program payments. Luke Beckman from Central Valley Ag is our corn and soybean market analyst this week. U.S. producers have harvested 24% of this year's corn and 26% of this season's soybeans. Those numbers come from the U.S. Department of Ag's latest crop progress report. The agency's quarterly grain stocks report showed on September 1st growers were still holding more than 1.7 billion bushels of corn and nearly 200 million bushels of soybeans. Both stocks were higher than a year ago. We talked with Luke Wednesday afternoon at CVA's facilities in York and began by discussing Friday's estimates.
Yeah, last week really probably a little bit friendly on corn, honestly, just because it wasn't so bearish. Had intended to see higher stocks with the idea that feed demand really was not there in the fourth quarter. Wasn't the case. Really not too bearish on the corn. Soybeans, there was really nothing to talk about in the bean trade. The wheat side was burdensome though. We saw that there was not as much wheat feeding in that fourth quarter, so that has some trickle-down effects back into the corn and soybean markets.
Go a little further into what this tells us about demand for both.
Sure, yeah, and it really sets us up well for 16-17 in that first quarter. You know, I think that your feed demand, your exports, and ethanol are all going to be very good for corn in this first quarter and really the first half of the marketing year. So I think that will help lend some support to corn. I don't think it's obviously going to push corn into, the $4 type area, but it should provide some underlying support to corn. Once the export program starts to slow down in March as South America steps in, especially on corn, I think we'll run into some issues there.
Give me an update on what harvest is like in your area of Nebraska and what the yield results look like.
Sure, eastern Nebraska, Jeff, I would take a dividing line down Highway 81, and generally speaking west of there, maybe 60, 75, 80% done on the soybeans. You go east of there and really just getting a good start. So bean yield's very good from what we've heard. Corn probably not enough that's come out to have a good idea of what it is.
How has basis moved here as we've entered harvest?
Yeah, so with the good soybean yields, soybean basis is pretty defensive. You're going to see that reflected all over the place, processors, elevators. It's probably going to be that way for the foreseeable future. Once harvest gets wrapped up and put away, that'll have a chance to recover. Corn basis, we're really just getting into harvest. You're seeing those values start to back off a little bit as well. Would suspect as we start to see elevator space pick up and farm space get full, you're going to find some corn on the ground and weak harvest basis values.
I want to spend a minute talking about crude oil, which has been fluctuating a lot. Can you give me an overview of why it's doing that and the implications of it?
Yeah, I mean, really the end of the summer, Jeff, we've seen crude oil, rally from the upper 30s to close to 50 here for WTI crude oil. Really the OPEC decision a week ago, they talked about forming an agreement. That has not happened yet, it's just talk at this point. But that provided a little bit of a bid if those OPEC countries want to rein back production. Have concerns though about what that does. It probably encourages the shale producer here in the U.S. to ramp back up. There's also a very good carry in the crude market. So if they are presented with an opportunity, they could step 12, 24 months out and lock in profitable sales as crude producers. So I don't think crude's going to run away. I think that it only encourages production and keeps a cap on it.
Let's move down to South America as the season begins down there. What do you expect for production?
Yeah, Jeff, so production in Argentina specifically for corn is supposed to be up, as much as 30% year over year. Favorable policy decisions by President Macri last December enabled higher corn, higher wheat production. Additionally, he announced this week that maybe the export taxes on soybeans were not going to get cut as they intended. So that could encourage some of those soybean acres to go back to corn. So South America is going to compete with the U.S. for corn exports when they come back online. Brazil doesn't have crop to export right now, so that's why we talked about earlier. March is really a critical time where we probably see things get a lot more competitive for corn in the world marketplace.
Tell me what your price forecast is for corn and soybeans here over the short term.
Yeah, so soybeans right now with the big yields really feels like, this is a good opportunity to be making some sales on those beans. We're going to get an idea of what this looks like next week with the S&D numbers from the USDA, but it sounds like the bean yield is going to keep going up. You're talking about a carry out, with a 4 in front of it, stocks to use north of 10%. I think producers just need to take a look and see how much of my crop do I have marketed and lay some beans off here at harvest. They're at good levels, yields are good, generally speaking. So take advantage of some of that on the beans. Corn-wise, we're presented with good carry in the corn market. You start looking out to March, maybe even July for this next year, and you're talking about prices $375, $380. Locking in that carry is not a bad thing to do. I mean, we've got a lot of open corn on farm with the producers we talk to, and taking some of that carry and just laying some risk off seems prudent here.
Do you like anything in the 2017 crop?
Yeah, we do, for the same reason. I mean, there's good carry when you step that far out. If we could get December corn up to $3.90, $4, great place to make sales. If we think the cost of production is going to be down 10%, that's 25 to 30 cents on a break even from a year ago. So if we were selling corn at $4.25 a year ago, $4 sales look like a great place to start for 2017.
You hinted at this, but your thoughts for the crop report next week?
Yeah, so generally speaking, bean yields are expected to be up, corn probably steady to lower. One thing that the trade is talking about is higher acres for both corn and soybeans, so harvested acres creeping a little bit higher. At the end of the day, we've got two really big crops coming at us, and producers need to be prudent with how they're marketing.
Next week, Jeff Peterson from Heartland Farm Partners will join us to look at harvest progress and the USDA's October crop report. We also look at hog markets this week with Iowa State Extension livestock economist Lee Schulz. The USDA's quarterly hogs and pigs report released at the end of September showed a U.S. inventory of 70.9 million head. That was up 2% from the previous year and the highest on record. This is not fortunate news for producers in a market that has tracked downward since early summer. In fact, Bloomberg said this week lean hog futures were the worst commodity performer last quarter, with the December contract falling 32%. We talked with Lee Tuesday morning and started by asking how bad have prices become?
We've really looked since mid-year. We've seen almost week over week prices decline. I think we're really reacting to the realization that pigs on the ground are a little bit larger than maybe some inventory counts previously. We've seen some very large slaughter over the last several weeks. And really that's what's being priced into these market prices. Also, I think, the demand situation is still very important. I think prices could be much lower given the slaughter levels we've seen. But demand has been very stable. When we look at domestic demand, export demand, we're about even at looking previous year ago levels. But really, when we look at China and Hong Kong, have really helped support the export levels we've had to date. I think as we look forward, I think exports will become a little bit more important here, especially from a volume standpoint. We've seen some very low levels in late 2015. So I think we'll start to see those export levels pick up. We're going to see a lot more product available as we get into the fourth quarter here, and that should help support a little bit these market prices. But really, we're looking at these prices reacting to these slaughter levels that we are seeing.
What did the latest inventory report really show you?
Well, I think before you even look at the new numbers, I think it's important to look at the revisions that USDA did make, and they've made significant revisions over the last couple of reports. We've added significant numbers, and really that was just because we've seen larger slaughter levels than we would have expected given those numbers. So when you look at expectations going into this report, we've really changed the base because of those revisions. But when we look at the numbers, all really pretty much above pre-report expectations. We looked at record levels when we look at the all hogs and pig inventory. We look at record levels when we look at the market hog inventory, and even the breeding hog inventory. While it was only up about 0.5%, we're really looking at levels as high as about 2008, that level of the breeding herd.
How concerned are you about slaughter capacity as we go later into fall into early winter?
Well, it still very much remains a concern. I think when you look at that slaughter capacity that we have, it is a little bit of a fluid level because we can slaughter a few more on Saturday, and we could see those hogs and the slaughter runs of those hogs really be dictated by what weights are. So if you look at the current situation, the last 2 weeks we've seen slaughter up about 8% year over year and about 7.4% year over year. Now that suggests that maybe some producers have pulled some of those hogs forward and going after some of the higher prices compared to as we get into October and November. But we also got to look at the weight situation. Weights are about where they were last year. We've seen weight increases since August. So I think really October is going to really paint that picture a bit more clear if producers have in fact pulled some of those hogs forward, and maybe we do see slaughter tick down a bit. When we look at the hog and pigs report, I think we're looking at slaughter levels in the fourth quarter about 4% higher than we seen year ago levels. We did see at least a week or two really pressure above that slaughter capacity. So I think we're going to talk about that as a major concern as we go throughout these next several weeks.
How low are prices for weaned and feeder pigs right now?
Well, when you look at in the context of recent history, they are historically low. Really, when you look at that weaned pig or that feeder pig market, there is some seasonality in that market. It starts to decline early in the year, and then by summer to late summer, it kind of hits its seasonal low. Well, really this year we've just continued that low, and those prices are low for maybe not the reason we always think of. When you look at corn prices, a lot of times dictate what those weaned pigs prices are because that's what it's going to cost to feed those pigs up to market weight. Now we're looking at the lean hog price and the optimism for profits when we look 130 to 170 days in the future, and those profits aren't looking very good at all. And so we're looking at opportunistic finishers have really shunned those pigs, and we've seen those prices of weaned pigs right in the range of about $15 per head, and feeder pigs, 40-pound basis, right around that $23 to $24 price per head. So very low when we compare to recent history.
Well, let's talk about margins here, Lee, and I'll ask you a broad question about how negative they are right now and kind of what you see them doing for the rest of 2016 into 2017 based on what you think market prices are going to do.
So if we look at market prices, and I think it's important to put those in a bit of context. When you're doing some of this forecast, a lot of this is based on historical levels, historical prices, and we're seeing historically high inventory levels, historically high slaughter numbers. So it's making forecasting, more difficult in that context. If we look at moving forward, I think fourth quarter prices are right in that $44 range. If we get into the first quarter of 2017, right in that 49. Third quarter, we're looking in the 60 to 62. Third quarter in that $65 range, and then taking a step back to about 56 in the fourth quarter of 2017. What that equates to for margins right now is in the fourth quarter, we're seeing about $34 losses on a cash market basis. For the year, that gives us a loss of about $3 in 2016, and most of that is almost all driven by the loss we've seen here in the fourth quarter. Then we get into the first quarter of 2017, I think that's right around that $24 loss. The second and third quarter, we're right in that break-even levels, maybe a tick higher, especially in that third quarter. And then the fourth quarter, we're about $15 losses right now per projections. So that gives us about a $9 loss in 2017.
U.S. pork exports in August were more than 11% higher than August 2015. Compared to a year ago, the U.S. shipped more pork to each of its top 5 buyers, including a 23% increase to Japan and a 27% jump to China. The October Nebraska farmer says weed management in soybeans is more challenging now than it was only 10 years ago. With weeds showing tough resistance to glyphosate and other modes of action, it takes planning and perseverance to win the battle on weeds. This month's issue says Jim Miller of Belden is not only waging war on his weeds, but also leaving nothing to chance. Miller has been using numerous modes of action in his herbicide program, along with a spring burn down to help alleviate yield-robbing weed pressure. You can read more about Miller's weed management in the October Nebraska Farmer. Farmers in Nebraska have harvested 27% of this year's soybean crop, on pace with the state's 5-year average. As we've told you previously, the post-harvest window can be a valuable time to sample fields for Soybean Cyst Nematode. University of Wisconsin Extension soybean and wheat specialist Shawn Conley was on UNL's East Campus last week to discuss his soybean production research. We spoke with him about the difficulty SCN presents to soybean growers.
Yeah, the challenge we're running into with growing soybeans with Soybean Cyst Nematode is the fact that Pi88788, which is the common trait used for genetic resistance, is slowly starting to break down. Greg Tilka at Iowa State University showed some good data, basically showing how that erosion is occurring in that trait. So given that over 90% of all the genetics that have resistance to SCN carry that trait, we see a big challenge in the years ahead.
How many farmers are using that trait?
Basically, every farmer that's growing soybean these days that is in an SCN area is using that trait. So I would say this is just a rough guess, but 80% of all the acres are using that trait.
How prevalent is SCN in Wisconsin?
So in Wisconsin, SCN or Soybean Cyst Nematode is prevalent in every single county where we grow soybeans. It's very similar to what we see here in Nebraska. So it's a big challenge, and not that it's in every single field, but it's in every single county where we grow soybeans.
What's the answer then?
There's a couple answers to do this. First of all, understanding if you have SCN. A lot of growers haven't even looked at to see if they have an issue. The next solution is rotations. Looking at a prolonged rotation, either more corn, throwing winter wheat in. The winter wheat price isn't very attractive going into this growing season. But also there are some seed treatment options that are available to growers today.
Do you agree that there are correlations to Soybean Cyst Nematode and sudden death syndrome?
So interestingly enough, we published a paper recently showing that there is a correlation, but I think it's been a little bit over dramatized. What I mean by that is you can have SCN in a field, you can have SDS in the field, and they're both combating it, or they're both affecting soybean yield. However, when you put the two of them together, you basically see this larger effect on yield loss, and that's where the problem is.
What do you mean by that, a larger effect?
So there's basically an interaction with the two of those pathogens once they get into there. So you may have 5% yield loss, 10% yield loss with SCN by itself, 5-10% with SDS, and you put the two of them together, that's where you get in the 15 to 20% yield loss when both pathogens are present at the same time.
Are there genetic varieties in the future or seed treatments that companies are working on to try and help with this problem?
Right, so there are a couple seed treatments available to growers. There's both ones within Syngenta and one in the Bayer platform, so there are some options there. I think the biggest thing that we're looking for, and we've been telling us there's a GM trait coming down the pipeline, but that's 15 to 20 years. So in the meantime, we have to look at different management strategies such as rotations, using seed treatments, altering genetics, and looking at some of these alternative forms of SCN resistance.
Can you expand on how effective those seed treatments are?
So the variability is pretty intense between those. So again, we've done a lot of data on that, and again, the response is going to be driven by the environment. What I mean by that is you don't see a very big yield response in a high yielding area or when you have a lot of water. Where we tend to see the biggest response to these seed treatments are in areas where there's drought stress. So unirrigated parts of Nebraska, Wisconsin sandier ground, higher pH ground, that's where we tend to see the biggest response to these inputs such as seed treatments.
Growers in Nebraska can sample their fields for SCN and get a free analysis thanks to a partnership between the Nebraska Soybean Board and Nebraska Extension. You can contact your local Nebraska Extension office for a sample bag and form or to learn more. The U.S. Department of Agriculture said this week it began issuing payments to many farms enrolled in ag risk coverage and price loss coverage programs during the 2015 crop year. The total across the country will amount to more than $7 billion. Nebraska's Farm Service Agency says it estimates about $700 million could be distributed in this state. Earlier this week, we talked with Dan Steinkruger, Nebraska's State FSA Executive Director, to learn more about that news.
We're processing the 2015 ARC PLC payments in our offices across the state and across the country. In Nebraska, those payments will be significant again this year. Little bit more money in some additional counties this year. So those amounts should be showing up in producers' accounts in the coming days.
What do you think is important for producers to know about, the differences in the programs and the differences in the programs that they enrolled in when they might get their money?
Well, once again, the ARC program is a county revenue program, so it does differ county to county. And we also this year have payments under the price loss coverage program, and we had significant participation for wheat and grain sorghum under price loss coverage, and we've got some pretty significant payments under that program this year.
You're also getting ready to issue CRP payments. Tell me about that.
Well, that's right. We're processing the annual rental payments under the Conservation Reserve Program. There again, those will go out over the next 2 or 3 weeks. And that's a little over $60 million in Nebraska. CRP participation is down. We're around just under 800,000 acres in Nebraska, but it's still a substantial acreage and program in this state.
Where's the national cap at, and why might that be important?
Well, the national cap was set, it was 25 million acres last year. On October 1, we moved to 24 million acres. Currently, USDA has about 23.9 acres enrolled, so the department's monitoring that cap. But we did open up enrollment on the continuous program this week and under the Conservation Reserve Enhancement Program in the Platte Republican area.
There have been some discussions about the loans that FSA issues and whether or not there's going to be enough money left in the tank because of the tight margins that producers are facing. Can you elaborate on what's happening there?
Well, I think with lower commodity prices and lower prices in the livestock industries, we've seen a higher demand for our farm loan programs. And we had a record year over the last fiscal year and ran out of money for lending. Going forward, we're now in a new fiscal year. We'll catch up on the loans that we have. But the ag industry is lobbying Congress to increase funding for loan programs, just anticipating that higher demand due to the ag economy.
To close out with, any deadlines that producers need to be aware of?
Well, the next major deadline we face is a November 15th acreage reporting date for winter wheat and our pastures and perennial forages. We moved that date to November 15th to align it with the crop insurance program. And for our ranchers and our farmers that have pasture, the importance of reporting by November 15th on those programs is the emergency livestock programs that were in the 2014 Farm Bill. So, and there is a feature now where they can report that and then just roll it over year to year to make that easier. But we ask that they look at that date and contact our offices and get an appointment.
Now, with this week's weather forecast, here's Nebraska Extension Ag climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. During this last week, we watched a couple systems move across the state. The first one was well advertised by the models last week, and we actually seen that frontal boundary move across the state in a slow forward fashion from essentially Sunday afternoon all the way through Tuesday. And of course, we've seen some good precipitation breakout in portions of west central Nebraska and a few isolated spots in central Nebraska, and then a reformation of the thunderstorms and some severe weather across eastern Nebraska. And then, of course, we had the secondary push of colder air as we came in toward the middle of the week, and of course Thursday brought some precipitation, some isolated severe weather across eastern Nebraska and the northern portion of the state. So before we get into the main forecast, I thought I'd bring you up to date on what we actually seen on a statewide basis during the month of September, and this is all from NextWeather estimated radar. but it gives us a good idea of where the heaviest of the precipitation fall. And you'll notice that a broad area from south central up through east central Nebraska had better than a couple inches of moisture, with a high pocket of 6 to 8 inches of moisture up in the West Point region. And then of course over northern Iowa we've been seeing inundating rainfall on several occasions. But farther westward you go, the drier the conditions are. We have had some very dry conditions in the Ogallala North Platte area, and of course in the northwestern Sandhills. Now some of this was replaced with some heavy precipitation most recently, so we are expecting to see some further improvements. Now, what we have going for today is that we have a jet stream that's way far to the north of us, and of course we have our hurricane that's moving up the eastern seaboard, expected to stall out. But this system is going to start to dive down in the western United States as we see a trough coming in. But for our region, we're looking at fairly nice conditions this weekend. Nothing that we can complain about, but as the week progresses, we'll start to see this trough breaking down. So here we are on Monday, starting to see the low in the northwestern United States trying to push this trough down, and we have another system coming in the western United States with a little bit of ridging in front of it. So the question is, how fast will this system move out into our region? And there are some signs by Wednesday we'll start to see some of this energy pushing out, but it doesn't look like we're going to see much in the way of significant moisture. But as we get toward the end of the week, we'll start to see that system coming on shore. Now, one of the things that we do know with this model is they tend to move these upper air lows fairly fast, so it's very possible that this is moving it too fast, the GFS model, and we'll see this slow down somewhat. So it looks a little bit more aggressive than what's really going to happen. In terms of precipitation, as we watch the precipitation, most of the activity is going to be right along the eastern seaboard in association with Matthew, and you'll see that start to move out shore. A little bit of scatter light precipitation in the southern plains as we go into Sunday, but as we go into Monday, we'll start to see some of that energy moving out into Kansas. Some of this might actually just touch southern Nebraska with a few sprinkles, but otherwise dry conditions as we go into Tuesday. And as we go into the day on Wednesday, we'll start to see some of the moisture starting to move into the western United States, particularly northwestern United States, and that'll start to fill in gradually as we move into the day on Thursday into the central Rockies. And more importantly, as we get into Friday, this will start pushing out to a more widespread precipitation pattern across the central Rockies. So as we go to the 8 to 14 day forecast, with that trough coming in, high pressure dominates most of the eastern and central United States with above normal temperatures. And in terms of precipitation, of course, with that ridge, dry conditions are expected at least from next Thursday to the following Tuesday.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean prices, hog inventory levels, soybean cyst nematode, and farm program payments. As always, you can keep up with Market Journal during the week by following us on Twitter, Instagram, and Facebook. Next week, Jeff Peterson will be our market analyst. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.